if you consider the United States 100 years ago, it was an emerging market. So great things can happen.
So Allan, today we'll be discussing America first and emerging markets after. So we saw in Donald Trump's campaign looking to build a border wall with Mexico. Then we saw the inauguration speak talking about America first. But what does this mean for emerging markets?
Right, good question. It's been an interesting year for emerging markets, full of volatility. But actually it hasn't really panned out the way people had thought. At the beginning of the year, everybody was avoiding the emerging markets. And we kind of took the view that it was going to be very difficult for one person in the United States to change everything in terms of their trade relations. So in fact, that's where we went into the emerging markets. We looked at countries where they didn't have imbalances with the United States in terms of trade, where they had migration that was stable, so there wasn't a lot of people leaving the country. And we looked at countries with low debt levels. So those kind of countries actually have done extremely well this year. And we still think that there's room for them to grow, and the valuations are still fair relative to the G7 countries.
And this is really interesting because it seems like 2017 has brought a lot of caution into the markets. Now, despite this caution for emerging markets, they still remain your top investment. So why do they still remain on top?
Sure. So here we can see in this chart sort of the broad-based improvement generally from last year. Countries like Brazil are basically have bottomed in terms of their economic slowdown, and now they're on a path to recovery. The same with India. In both of those countries, you also see economic reforms, which maybe in the short term cause a bit of volatility, but in the longer term, it's the right thing to do, and it will pay dividends in the future. So those are the places where we like to be positioned before the crowd, kind of rushes in.
Right. And you mentioned the short-term volatility that we are seeing there. So if you look at advising your investors, for example, what kind of risks should they be aware of? Sure.
So I think one of the biggest risks are, everybody thinks about credit risk. They think about, that the emerging markets have low quality credit. But I would argue in some of the developed countries, we've reached unattainable or unsustainable, let's say, credit levels, especially in the energy companies, but also auto loans are over leveraged. By comparison, a lot of the corporates in the emerging markets have had to be self-financing. So as a result, their debt levels are lower. Even though they don't get the credit in the credit rating, it's still high quality yield, basically, from our standpoint. And here you can see, for example, Turkey is one of our favorite countries for emerging market debt. Now there, the other concern that we always have is liquidity. How easy is it to get in and out of the investments? And so there, we're not buying local currency bonds. We're buying US dollar denominated or euro denominated bonds with some of the financial institutions there that are very well financed. And that way we can be assured that there's good liquidity. So if we need to sell some of the positions, if there's a change in the politics or the economics, then we have an exit. Whereas if you buy local currency bonds, they do produce a lot more yield. But it comes with a risk.
So bonds are more the investment as opposed to the currencies themselves?
Absolutely. I think the smart thing to do is to hedge out the currencies, because the currencies are extremely volatile. For example, with Brazil in the spring, late winter, early spring, we saw a sell-off in the Brazilian real that would have basically wiped out your returns for the next 3 years in your bonds. It fell 10–15% in a few days. So those are the things to avoid. Otherwise, I think the emerging markets have a bright future. And despite sort of Donald Trump's campaigns about building walls. I mean, if we look at what he has done, or hasn't done, those two things. So he's opted out of the Trans-Pacific Partnership. NAFTA is likely to be renegotiated. So Mexico is still, maybe a bit of a difficult spot. But the immigration laws that he wanted to change it hasn't been allowed by the courts, and China hasn't been labeled a currency manipulator. And the wall hasn't been built, I guess, is the last thing. So I think there is hope for the emerging markets.
Great, so emerging markets are the one to watch.
Yeah, and I think the final thought that I would leave you with is, if you consider the United States 100 years ago, it was an emerging market. So great things can happen.
Absolutely. Well, thank you so much for coming in today and sharing your thoughts.
Thank you.
Well, that's all from us, but there's plenty more, so don't forget to subscribe to Dukascopy TV.